evening. You're watching The Money Show on ET Now. I'm Ubina Kapasi, and this is the show where we help you out with your personal finances. Get your questions and queries answered as well. Just shoot an email to us on themoneyshow@etnow.tv. Well, here's what we'll be discussing today on the show. ESG investing. There are a couple of NFOs as well that are launching in the ESG's basket. And some very interesting trivia. The Nifty ESG 100 index has actually outperformed the Nifty 50 in the last 5 years by more than 1%. So how does this, very exceptional investing methodology fit into your portfolio? Later on the show, this is for all those individuals who have to travel in the next couple of months. Things are really tough out there, especially for travelers. But if there's an emergency, I understand that you may have to travel. However, there are a couple of things you need to ensure. Firstly, adequate health cover, adequate travel insurance cover. And for that, we'll be joined by ICICI Lombard General Insurance. And later on the show, what should be the ideal date change policies, refund policies and cancellation policies that you should watch out for before booking your flight, be it domestic or international. So all of this lined up on today's episode of The Money Show. And yes, like I mentioned, let me remind our viewers again, you can write into us on themoneyshow@etnow.tv. We will get your queries answered. So without any further ado, let's bring on board our very first guest joining in on the show. We have with us Mr. Anil Rego. Mr. Rego, thank you so much for joining in, and I hope you are doing well amidst this pandemic. So to start with, ESG is once again gaining a little bit of traction. We have an NFO as well, which is calling itself an ESG fund. So to start with, for our viewers who may not be aware, break down this concept of ESG for us, sir.
Yeah, so ESG basically stands for environmental, social, and governance. So a fund like this is sort of a socially sensitive fund, and what it does is it excludes sectors which are deemed harmful by society, like liquor, tobacco, etc. And the second thing that they do is they run various parameters on governance and social as well, and so from that they come back with a universe of stocks which fit into this ESG filter, and so that's what they do, basically looking at relatively more socially impacting stocks, not necessarily always socially impacting, but good social governance, etc.
Okay. So it's a great way for those individuals who want to ensure sustainable method of investing, wish to invest in ethical companies, and companies that have high corporate governance, but at the same time, of course, are investing for the purpose of wealth creation for themselves as well. So, Mr. Rego, there are obviously restrictions, where these companies can invest and they cannot invest. I'm assuming they cannot perhaps invest in mining companies because then it would be against environmental norms. Similarly, not maybe in tobacco or liquor companies, because then it's against the S of the ESG investing. So do you think that these restrictions, have the potential of perhaps curtailing the return potential of ESG stocks or ESG funds?
What is interesting, the data that you gave at the beginning, is that, the index, for example, the Nifty 100 ESG TRI, sort of has done reasonably well, even in longer term periods. And this is possibly because, it's also that the market loves quality, investors love quality, and where there's some bit of social impact also, typically, the brand is a stronger brand. And so it's not just about financials that matter. So it's interesting that even if you go beyond financials, ESG companies also do relatively well. Of course, you need to be, clear as to what is your benchmark, etc. But broadly, I think it's a theme that can also do well. And at times like now, where quality is important, right? And they are at volatile times, you'll probably find ESG as a theme will do better. I think it's a good theme to actually consider in your portfolio.
Yeah, very interesting. ESG funds often do follow the highest benchmarks when it comes to maintaining a certain quality of conducting business practices, whether it's in the E part, the S part, or especially in the G part. And in times like these, when there's so much of uncertainty and unpredictability, ESG funds in a way, sort of, I guess, help you in that sense, because they're picking only the companies that adhere to these norms or of positive ESG impact. Mr. Rego, how would they essentially fit into, or actually before I ask you that, you believe that right now, compared to a large cap fund or an index fund, and the circumstance that we are in, just so that I don't want to get this wrong for our viewers, you recommend that maybe an ESG fund would be better off than maybe a large cap fund or an index fund?
Yeah, so there are two aspects that you need to consider. One is, which category is the ESG fund investing into? Is it investing, for example, in a large cap or mid caps, etc.? Right now, mid cap has sort of, and multi cap maybe, probably will be the way to go. So from that standpoint, I think yes, the ESG should do better than a large cap index. It'll probably be sort of in line with the say a Nifty 500 index, for example. Okay, so from that standpoint, yes, it's I think ideally it should do better than an index fund. Also, if you look at from the long term in India, right, managed funds have normally delivered better returns over a longer period of time in comparison to the index itself. So that alpha that probably as India matures, that may come down. But I think still, I would believe that we may find that the slightly actively managed funds could do better, and from that standpoint, it may make sense for you to also look at ESG. And in the current market, which is expected to be volatile, and it has run up some bit, there are risks around, let's say, the US elections, etc. And also, there's always this fear that would there be one more down, one more leg to it, thanks to COVID, and if it doesn't come back in, the markets and all the economy doesn't come back in. So from that standpoint, I think in the current environment, definitely ESG funds should do well, and I think hopefully they should also beat the index.
All right, well, interesting. Mr. Rego, we often say that, okay, if your goal is long term, maybe retirement or something, then you can invest maybe in mid caps and small caps, which tend to have high volatility, but then of course have higher return potential as well. So, we accordingly say that, okay, certain percentage in mid cap, small cap, certain percentage in debt, certain in gold, so on and so forth. How would ESG essentially fit into then an individual's overall portfolio? Let's assume for now that his or her goals are long term.
Yeah, so I guess it will come under the thematic space, within the client's portfolios. At the same time, if you go back and look at these funds, they are reasonably diversified. I think we need to, it may vary from fund to fund depending on whether they are focusing on only large cap or multi cap, or possibly even mid caps if some fund comes like that later. But you need to be clear, then if you are in favor of, let's say, looking at a large cap, then you can accordingly have it also in that space, or a multi cap. But yeah, so I think broadly from where it will fit, it'll probably fit in the thematic side, where I think a portion of clients' portfolios can sort of go into a thematic space.
All right, Mr. Rego, would you what would be the riskometer of a fund like this, of this ESG fund? How would you sort of classify it? And do you think that for certain individuals this may not be an appropriate way of investing? Of course, I understand that they have their personal principles, their ethics as well, that must be respected. But maybe there's a certain characteristic of this fund that may not be suited to certain section of investors. Do you believe that's the case?
I think most of these funds that I've seen are reasonably diversified ones. So it may fit into a larger set of investors. If you ask me, maybe one set where it may not fit as well are funds which are investors who look for the highest risk. So these, I think, will end up being lower risk, and it may not say deliver like a mid cap or a small cap type of fund. So if you leave that out, I think it should broadly fit into the portfolio of most of the investors.
Okay, so this should fit in the portfolio of most investors, not to worry. By the way, Mr. Rego, in India, I think up until now, there were just 2 or 3 odd funds that, have been, giving this option of ESG. Now we have another one coming up from ICICI Prudential. Do you think that ESG funds now are coming of age in India, gaining popularity?
Yeah, I think so, because you have 3 funds. Of course, one of them is really small, but the 2 funds actually have almost like 4,500 crore of AUM. Okay, and so it's a reasonable size now. And keep in mind that this is a recent theme relatively, right? And so keeping that in mind, and we have also one coming from ICICI now. One would like to see how that is. So allocations have come strongly into the ESG space. So I think they've done reasonably well.
All right. That's of course all about ESG. In fact, folks, we'll also be bringing on board the fund manager of the all new ESG fund on Monday's episode of the Money Show. So stay tuned for that. Well, on that note, we'll take on board some questions and queries. Ladies and gentlemen, if you would like to know more about ESG, if you have already invested but have certain questions, or in general, if you'd like to know about your portfolio, you can write into us. The email address is themoneyShow@etnow.tv. Well, let's take on board our questions. We have the first query coming in from Ajaz. He says, I'm 33 and I've invested in a couple of funds. He doesn't have any immediate goal, but he can stay invested for the long term. So there are 2 funds of access. One is the blue chip, and interestingly, there's one thematic fund, banking and PSU. Parag Parag long term, Kotak Standard multi cap, Mirae Asset emerging, L&T mid cap, HDFC small cap, and DSP tax saver. So just 2 from the mid and the small cap space. Rest are all large cap funds. The Kotak Standard multi cap as well, for all means and purposes, is actually a large cap fund. Now he wants to know, is it a good strategy to reinvest money in ELSS every 3 years and invest ELSS's SIP in open-ended equity scheme to avoid lock-in? Well, if you will sell it before the 3-year period, then there will be tax implications. That's going to be the disadvantage, Ajaz. And here's one more question. Is it safe to invest in mutual funds through MF Utility? So, Mr. Rego, how would you advise Ajaz on his portfolio? Any chops and changes you would recommend?
Yeah, so I think, first of all, he's made a good choice of funds, and so congratulations to him. If you ask me, it's a point of preference as to what mix they would like to have. So, and based on one's risk profile, so it is slightly leaning to the large cap side, but the fund selection is reasonably good. If you ask me, the only one point that I may want to bring out there is he has an Axis banking and PSU fund, okay, which is on the debt side. So that's the only debt that he has. So he needs to just come back and see, do you want to look at a larger component of debt based on your liquidity? So that's a balance that one also needs to look at, not only the large cap versus mid cap and small cap, but also a mix between the debt and equity. So I think both of them sort of depending on your risk profile. Now coming back to his other questions, one was basically on I think his point is, can I reinvest the proceeds of ELSS every 3 years? So yes, so at the when it's open for exit, that is one option that you have to sell your ELSS fund and reinvest that money back into let's say an ELSS scheme. Now that you can do, assuming that you've done the same amount for 3 years, then it can almost be a continuous process where you can just keep reinvesting for the ELSS scheme. However, what happens is you need to be disciplined, right? If you're disciplined enough to say, okay, that additional money I will go and put it into a diversified scheme, then that is something that you can do. It should not happen that because you didn't have the pressure of doing the ELSS scheme, you have invested lesser. So I think that's one sort of suggestion for him. The other point that he had was basically on the MF and using MF utility. MF utility is a good platform and it's from the industry, so I think it is something that you can trust and use. And they have options where you can sort of directly go, as well as you can go through an intermediary. Okay, so the what are some of the things why people like MFU? MF utility basically has good coverage of funds, okay, right across, and also you can do direct, you can do regular, and the most important feature there is you can do switches pretty seamlessly across funds and easily. So that is sort of a thing. So yes, you can choose to use MFU if you are comfortable.
Okay, well, very quickly, let's take on board our next query. It's coming in from Partha Bhaktial. He says, I'm having an SIP of 4,000 rupees in HDFC Mid-Cap, Kotak Standard Multi-Cap, L&T Emerging, Motilal Oswal Multi-Cap, Nippon India Small Cap, Sundaram Mid-Cap, and SBI Mutual for the last 3 years. He would like to know if his, the fund selection is correct, and he's asking you if he wants to invest in the share market, direct share market as well for the long term. Mr. Rego, he's been investing in these mutual funds for only the last 3 years. Would you advise him to now start investing directly in the share market as well? Again, he doesn't want to trade, he wants to invest in the long term. So what would be your recommendation?
First of all, let me look at his mutual fund portfolio. I think it's slightly leaning to mid and small cap, so you have to be conscious about that. It's going to be volatile. So if you're able to put in anything new, maybe you can use more in the multi-cap and the large cap side. Now, coming back to his other question of the share market, see, it depends on whether you have the inclination and you have the time, right? And also you have the expertise to be able to switch between, one stock to the other, one sector to the other. And so you should be able to track companies, their cycles, the economy, its cycle, etc. And if you are able to do that and you have the time at hand, then definitely, you can go and invest directly. Otherwise, just use maybe a fund route, and that may be simpler for you.
Okay, so that's recommendation coming in from Partha. And let's take on board our last query for the day from Neeraj Kumar Bhatt. He says he's 30 years old in government service, got a 1 crore rupee, he's got a health insurance plus a 1 crore term insurance, got a monthly NPS as well because of the government policy. He's got PPF too, so I think he's pretty sorted on that front. But he's got a couple of mutual funds too, 2 ELSS funds, Aditya Birla and Axis, SBI Blue Chip, HDFC Mid Cap, SBI Small Cap, all are being done through SIPs. So roughly about 15,000 rupees in mutual funds. His aim is wealth creation. He wants to know, should I continue with the same funds, keeping the coronavirus mayhem in mind? Should I add or subtract any fund? Mr. Rego, what would be your recommendation?
So I don't think one should react adversely to, say, a market situation like corona, and especially if you are, say, going through the SIP route. So I think that's definitely not a problem. Some comments on his overall is maybe whether he wants to look at the debt side a little more. Okay, if that's the case, but broadly, I think he can expand a little bit more, or even on the equity mutual funds. I think at this point of time, I would suggest him to look at the multi-cap space and probably look at Canada Robeco, equity diversified fund, and this should sort of do well. The other aspect is he needs to just relook at, keeping in mind Corona. If you ask me, one thing that anybody needs to do is go back and look at their health insurance and their covers, is it sufficiently? Because a lot of the time, we've taken 1 lakh, 2 lakh, 5 lakhs, which, you'll find that today, if it's a slightly longer stay, like it's happening in current situation, you may, be short of it. So review your, health cover and, see that, you have sufficient cover both for yourself and your family members.
So there you have it. That, of course, is the recommendation coming in from Mr. Rego. A few changes as well recommended in your portfolio, Neeraj. I hope you've taken note of that. All right. Well, folks, that's all the queries we'll be able to take today. Don't forget, you can write into us on the Money Show at etnow.tv with your questions. And Mr. Rego, always a pleasure having you with us. Folks, if you would like to catch this conversation on ESG investing, particularly in light of the fact that we have a new fund as well coming up, you can subscribe to ET Now's YouTube channel. This episode will be up over there. And for now, we will take a very short break right here on the show. But if you have travel plans, ensure you stay tuned, because coming up, I'm going to be talking about two important elements that all prospective travelers must take note of: insurance and airline policies. Don't go anywhere.